Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, March 22nd, and this is the weekly market update. The disclaimer, anything that you hear or see in this podcast or video is not to be taken as investment advice. This is for informational purposes only. Anything discussed, you need to do your own research. It's your money, it's your responsibility. Please do your own due diligence. Okay, I got allergies and stuff because the spring here is starting to sprung, and so bear with me. It's one thing after another, seems with my sinuses. Anyways, we'll get started. So I just want to do a quick plug for the Actionable Intelligence Alert suite of products. Uh, we do have a Actionable Intelligence Alert Facebook group, which is growing. Uh, all the links for these things will be in the description below. If you have Facebook and you're interested in participating in the Facebook group, it's free and post things there. Now other people are starting to post, so it's starting to get some inertia. So that's something that you can join. It has links to videos and memes and articles and things like that. Kind of what we do in the Discord, but a little bit more general. We don't really talk about specific investment themes. In the Discord, which is part of what you get as a subscribing member, paying member, we talk a lot more about portfolio companies and other investment themes. I also have on Substack the free weekly email that comes out. That's just a collection of the things that I'm reading or watching or have seen during the week that I've collated into a short email with links, and you can peruse that. That's free, basically around the themes that we're discussing in these weekly videos. And of course, we have the Actionable Intelligence Alert newsletter, the paid subscription, $199 per year. It's on Substack. We have two model portfolios in there, one that's basically based on capital appreciation and one that's I called it a dividend fund, but it's basically a total return investing, basically stocks that are paying dividends that are rising and also buying back shares. So that total return. So those are two model portfolios that we have there that you can get some ideas from. So I wanted to do a short plug for these. Links to all of this are in the show notes below, or yeah, in the description below. Okay, let's get started with this week's slide deck. So this is from Steve Blumenthal. He recently, I guess, they were on a call with it was a client call with Felix Zulauf, where Mr. Zulauf was discussing the coming Mag 7, Mag 10 unwind. This is a chart from Ned Davis Research that Steve provided in his weekly email that he sends out, which I suggest you subscribe to. And basically what this shows is on the top, the S&P 500. And then this is the bottom is the top S&P 5 stocks by market cap as a percent of the total S&P market cap. So this is just your S&P going back to 1974. And this is basically showing you the top 10 stocks as a percent of the overall. And you see it's right around these bubbles. This is the Nifty 50 bubble back in 73, 74, where the Nifty 50 top 10 stocks market cap weighted in the S&P represented about 34, 35%. This is 2000, the tech sector bubble. The top 10 stocks market cap tech stocks were representing around 30%. And then you see here the top 10 Mag 7, Mag 10 stocks. You see that they are now representing close to 40% of the S&P. We've talked about this before, and this is what we've said we thought would happen. We get to these extremes. This is the most extreme, uh, amount of concentration in the top 10 stocks that we've seen, at least in 50 years. And subsequently, what happens is you usually have bear markets and this unwinds. And so that's kind of what we've been saying here for over a year. As these things unwind, the idea was the capital has to go somewhere. It would go into value and other neglected areas or areas that have underperformed, emerging markets, energy, other value areas. That's what we're starting to see. The question has to be asked, is this just a temporary mean reversion and then we're going to continue higher with the tech stocks? Or is this a generational situation where we're at a top and this thing's going to unwind? That's the question you have to ask yourself. We don't, it's unknown, but the probabilities are that we have topped and that we will slowly bleed off. And then we'll see, you can see that the S&P moved higher, but these top 10 stocks get supplanted by other stocks, right? As they bleed off, other components of the S&P that were neglected have a tendency to rise. And so that's what I suggest is going to happen, but we'll see. That's how I'm betting in the portfolio currently. And, we had about a year or so of basically underperformance, a year and a half of underperformance in the portfolio, but we're currently outperforming in both portfolios because of this unwind and the rotation out of the tech sector into more undervalued sectors, i.e., value, energy, emerging markets, foreign stocks. So this is from U.S. Global Investors weekly email that comes out. This is showing the NVIDIA death cross. What's the death cross? What's a technical phenomenon where the 50-day moving average crosses the below the 200-day moving average, and that's typically indicates a bearishness, right? Usually means a top. You can see, I think NVIDIA is rolling over. This is one of the main poster boys for that whole Mag 7 unwind, if you will. So we'll see. Of course, we have to based on probabilities. This could just be a temporary pullback, a minor correction, and then we move higher. Who knows? That's not how I'm betting, though. But certainly not ready to take a victory lap yet. Here's a sector that we told people that we were getting into. It's outperforming. This is the MSCI China Index has gained 23.7% year to date. It's outperforming, obviously. Again, is this something that's just a temporary rotation of capital, or is this a longer term phenomenon? I mean, China has been out of favor for a decade at least. I think it's a longer term multi-year bull market. That's how I'm playing it. Energy, this is a 2025 sector performance. Energy XLE is currently the best performing sector. This is another thing that we're invested in. It's showing up in our outperformance. So another thing that I think is going to continue. Remember, there's a lot of money concentrated in this tech sector, this Mag 7, Mag 10, what have you. The market caps of the energy sector, the out of favor sectors, let's say, it doesn't take a lot of capital rotating into these undervalued sectors to really get them to move because the capitalizations are so small now relative to the Mag 7. So as capital rotates out of those, my thesis is that it rolls into these undervalued sectors. You could get a real big push because the market caps are so small. And so we'll see what happens, but this is what we're currently at so far as we near the end of the first quarter of 2025. Here's just a snapshot. There was a bigger chart, but I just pulled the top, 10 or whatever this is. Foreign markets are outpacing the U.S. market. Look at Poland, up 40%. Greece up 24%, even Germany's up 23%, Chile 23%, China 21%, Colombia 20%, Brazil up 18%. These are things that we have been talking about that were undervalued, that we are invested in. I think that again, these are areas that I think that have a lot more room to run. You haven't missed. Again, this is typically when these rotations happen, we can go back to the first chart. Typically when these rotations happen, it's multi-year. Okay. After you had the Nifty 50 bubble, this rotation bled out for, 16 years. After the tech wreck, you bled out for, 14 years. Okay. And then you get the next up cycles. It's the next theme that comes along. Remember, what was the theme here? The internet. Now, was AI. Back here, it was all these conglomerates and nifty 50 stocks. So you get these themes, and then when they get overvalued, they play out, and then it takes a while though, because why? There's this institutional memory, right? There's this inertia. It'll come back. It's not over with yet, you know, because people have made so much money for the last 10, 15 years. It's been nothing but up. And so it takes a while. I saw that myself. I've experienced bear markets where I got caught up in that type of thinking, and you can't think like that. If you've made your money, you have to look at the probabilities, look at the valuations, look at but that's not how folks look at it. But I think smart money is rotating out and into undervalued sectors. A lot of these have a lot further to run, in my view. So I wanted to show this, the oil price, even with all the negativity around it, is kind of holding, where we're at. We're getting ready to end coming out of a lot of turnarounds. This is the global refinery turnarounds. That's where they do maintenance shutdowns. These are the different areas around the world. You can see as we go into April, May, and June, obviously in the Northern Hemisphere, as you enter the summer, you have more gasoline and diesel, uh, jet fuel demand because of travel, because of summer vacations, all that, the travel season in the US, the driving season. And so obviously as these turnarounds end and the refineries are shut down, as they come back online, they'll begin pulling crude. And one of the things that I want to point out is we're at like multi-year low points in crude oil inventory. And so this happens every year. It's not some kind of like special event. But what I'm saying is, we haven't, with all the negative news supposedly that's been out there, we haven't really been able to see crude go down to $50 a barrel. Okay. And as we come out of turnaround season, as we enter the travel season, as we see demand increasing, as economies recover, as I believe they are, as we've seen the stimulus in China, the potential stimulus in Europe, the potential cessation of hostilities in Russia, Ukraine, and the continued, again, 5% depletion, I think that, we have a lot of upside in oil. I feel like oil is the opportunity in certain oil equities is basically similar to what we saw at the COVID lows. It's not the exact same setup, but valuations are very cheap, especially for long-lived, long-life oil sands assets in Canada. Now, obviously, the caveat is that we have this Mark Carney guy who's super environmentalist. Um, Politics will come into play, possibly. That's a risk. There's other risks around, the economy. Maybe oil still does go down to 50. Who knows? But I'm just saying that I think there's a setup here for energy that people are ignoring. Sentiment is horrible in energy. No one likes it. And again, now it's the best performing sector. Again, this could be just a 1 or 2 quarter move, but I think it's setting up for, like I said, later on this year, we're going to see oil prices move higher, and I think oil equities are starting to sniff that out. So it may be an opportunity set. Again, there's a lot of companies that I like in Canada, long life reserves, oil sands reserves. You have to understand something. The oil companies really haven't done what they've done in the past, which is just, well, with some exceptions, like there's some companies out there that are empire building, but most companies in the oil sands are just doing maintenance cap, paying down debt, returning capital to shareholders. And that's working very well at current oil prices, the returns on capital, returns to investors. And what happens in an environment where oil's not at 70, uh, in the low 70s, but at the low 80s or possibly $90 a barrel later on this year? I think that's a lot of room for movement in the equities. and a lot of shares have been bought back over the last several years by these companies. So I think there's a turn in sentiment coming. That's my view, and something worth looking at. Again, I think that some of these valuations are, you know, generational lows, similar to what we saw in COVID for select companies. So we talked about this before about the big gas turbine manufacturers, and this is an article. I'll put it in the show notes from Semaphore. Big gas turbine manufacturers aren't ready to bet on the AI boom. Again, this is another indication of, we saw this with gas turbine buildouts around 2000, late 90s. There was this big boom as markets deregulated. People built all these gas turbine plants, and then a lot of them were abandoned or underutilized. And so they don't want to run into that again. So they're actually are not expanding capacity because, again, people fall into this trap, it seems, of the next new thing and then doing these, you know, uh, compound annual growth rate exercises and, simulating out 10 or 15 years at this grows at 9% compounded. This is where we'll end up. And this is why we need this much X, whatever, copper, lithium, or gas turbines. And I think that this article is kind of sobering that although the manufacturers are doing well and they're booked out, they're not going to invest in additional capacity because there may be this may be a one-trick pony. So some snippets from the article. Some of the world's largest makers of gas-fired electricity turbines are holding back on a full-scale push to ramp up manufacturing in response to surging demand from data centers and other big power customers, executives told Semaphore. Turbine manufacturers are now completely sold out for years to come. Between 2023 and 2024, orders in North and South America increased fivefold. If there had been sufficient manufacturing capacity, they could have easily expanded sevenfold. Delivery times have doubled in the last year or so. A turbine order placed now won't be delivered until at least 2028, and the line is getting longer every day. Prices are also spiking up threefold in the last few years, according to NextEra Energy CEO John Ketchum. Yet the industry is dragging its feet out of concern that the boom in power demand driven by AI and the broader electrification across the economy could go bust sooner than expected. So I know that the Trump administration is pushing this. We're seeing more natural gas fired supply, but the turbine manufacturers have been bit in the past. Then you also have some manufacturers like Siemens in Germany that are already suffering, and GE to a certain extent on their renewable side. They're not making money and they're taking big write-offs. And so do they, you know, you have all this demand coming in. Why not just, raise prices and there's no reason to go out and build a bunch of factories and then have the demand go away when AI goes, poof and disappears. So, um, they're doing well with their current manufacturing. You see that the demand is there, deliveries are there, prices are up. There's no reason to go nuts and double capacity based on a hope and a prayer. So maybe we don't see the build out that we originally were anticipating. Again, you always have to be cautious when you see these analysts at these different investment banks or whoever putting out, okay, we're in 2025 and by 2040, we're going to need this. And so it's a compound annual growth rate, blah, 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 blah. It seems like a lot of this needs to be reconsidered. Same thing happened with copper. Remember, copper was going to, we were going to run out of copper. We don't have enough copper because of all the EVs. And then the EV thing kind of is not ending up where everybody thought. It's still demand, but it's not the demand that people thought. So please take this into consideration as a caution. Doesn't mean there's an opportunity. It just means that you have to temper your expectations and look at what reality really is. Again, mentioning copper, in case you haven't been paying attention, it's over $5 a pound now. So that's interesting also. I don't have time in this week's. We only have so much time. I can't just go on for 4 hours, but I'll be delving more into these things. But something's happening, right, in the commodities sphere. We'll get to that later when we talk about gold later on. So this is interesting. China to add to state metal reserves. China to add cobalt, copper, and boost state metal reserves. This is a summary from Bloomberg. China plans to add to its strategic reserves of key industrial metals this year, including cobalt, copper, nickel, and lithium. The move is aimed at boosting the resilience of critical mineral supply amid increasing energy transition demand and geopolitical tensions. I think that's very important. I think that's the main reason. The National Food and Strategic Reserves Administration has made price inquiries and sought to bid for some of these metals with the goal of meeting demand in crunch times and stabilizing prices. So this is interesting. New shooter at the table, coming in and buying copper, nickel, lithium, and cobalt. I mean, cobalt, nickel, and the lithium price are down big. Copper is over $5 a pound, as mentioned. Something to keep your eye on because when China enters markets, it usually does it in size. So need to keep an eye on this. This is something also that the Trump administration is talking about. I think Trump signed this week an executive order. I don't remember. Somebody can correct me in the show notes. Um, but basically a big push for freeing up mining in the U.S. of critical minerals that we need. Instead of stopping the exploitation and the use of the minerals that exist inside the valley of the continental United States, we're going to loosen that up, right? Because, if you want to be a global superpower, you cannot be devoid of supply. We talked about that last week with shipbuilding. You can't be I don't know how you're a superpower if you basically have no shipbuilding capacity. If you have no minerals, if you're relying on other people to supply you with things, uh, then you are, especially if you're going to ramp up hostility with with an emerging superpower like China. I believe I read an article or saw something where somebody reported, it was reported that I think it was an executive at one of the U.S. defense contractors that basically said they're completely reliant on China. That is crazy. How can you be a major defense contractor in the United States and yet your supply chain is reliant on China? This is just the complete abdication of responsibility and forward thinking of our policymakers and the financialization of the economy. Just go where it's cheap. Who cares? Because it really wasn't about the defense of the United States. It's about making money. Okay. And that's what everybody cares about in the United States and in the West more than anything else. I'll make money. I don't care about my country. I don't care about my people. I don't care about this. I just want more money. And if that means buying all my pharmaceuticals from China, certain components that I need for uh, uh, defense industries, because it's not about defense, because we're not really going to have a war. It's just about getting part of that $900 billion a year defense budget. And that's what, this new administration is trying to reverse. Will they be successful? I don't know. There's a lot of vested interests that don't want change. But I don't know how you're a superpower if you're reliant on foreigners for all of your inputs. That's crazy. And also it plays to the constituency of this administration, which is working class, small business, and tradespeople. You increase mining, you need more miners. You need more workers. It creates mining towns and booms and cafes and shops and all this other stuff, right? All this thing that goes along with it, with the increased investment. And that's the constituency of this administration isn't necessarily Wall Street and the people that have benefited from the financialization of the U.S. over the last 40 years. Now, there's a certain amount of people in there, but, you know, if you want to hold on and at least even have this, you know, Don Roe doctrine, a offtake of the Monroe doctrine, where you're, focusing on the Western Hemisphere, you still have to produce critical minerals that you have here and not rely on everybody. What are you going to do? Go to war with China and then they shut down the supply of the missile components that Raytheon needs or whoever, you know, that's crazy. And policymakers have allowed this to happen because this is all kabuki theater. It has nothing to do with national defense and the protection and defense of the United States and its geopolitical goals. It's about, hey, people give me money They're a constituent, give them more money, and then they go and get the parts for as cheap as they can and put as much money in their pocket as they can, and then recycle some of that back to the congressional, uh, political campaigns. It's not hard to figure out how this works. The U.S. has basically been sold out by its elites. The whole West has been sold out by its elites. So here's a interesting tweet. Chinese banks offering cheap consumer credit. Now, I'm not saying this is a good thing. I'm just saying what's happening and more liquidity. And the Chinese are doing a lot of things to get a lot of liquidity into their market because they're in a, kind of in a deflation right now. You've seen their long rates are down to like 1.5 or 1.6 or something. But anyways, Chinese banks offering consumer loans at 2.6% with approval time of 60 seconds. And you're bearish? That's what this guy, Jack Farley, says. Then he has a blurb here, a news item. Among those offering the cheapest rates were the Bank of Jiangsu Company, which is promoting a preferential annualized interest rate of 2.58% on consumer loans up to 1 million yuan, which is about $138,000, before the end of March. Bank of Ningbo is touting an annualized rate of 2.68% for first-time borrowers with a maximum quota of 200,000 yuan, promising speedy approvals within 1 minute. So the point is that the Chinese are making a lot of moves to increase liquidity and try to turn their economy around. That's going to have an effect in my mind. And so I'm playing this uh, move in China kind of at the periphery. You'd have to subscribe to the newsletter to understand how I'm doing it. But there's ways to do it without necessarily having to buy Chinese, stocks. Although some of the Chinese stocks have done very well, like Alibaba's up like 80%. I own a few shares in my personal portfolio. It's not in the AIA portfolio, but I own a few shares. It's done well. But the shares that I own are basically second, a way to at the periphery take advantage of it. So, and it's working out fairly well in my view. So I wanted to show this. This was a chart, part of an article that I read this week. It shows the share of world GDP from 1980, basically in 5-year increments. And you see, I was actually surprised that the U.S. kind of had, kind of peaked out in share of GDP in 2000, but it's kind of like come back a little bit, right? We're kind of around that 25 plus or minus 1 or 2% percent of GDP. The big loser has been Europe, as you can see. Okay, it's went from 25% of GDP down to 14%. Japan's been another loser, and I think a lot of this has to do with demography, right? The demographics are really poor here, and just at least in Japan's case, and also in Europe's case. And although they are trying to replace it with, you know, developing world personnel that aren't capable of, but that's another discussion that I'm not going to get into in this. But who's benefited? Well, China, right, went from 1.67% to 16%, although down over the last several years from 2020. And India, okay, India is only 3.36%. So the rest of the world is basically stayed around 35%. So it's actually quite interesting to see where the growth is and where the decline has been. And Europe is the big decliner, quite frankly. U.S. has maintained. So this is interesting. It was kind of eye-opening for some of the things that I had been thinking about. Obviously, we all know China has grown, but I thought, India uh, has a long runway, it looks like. But we will see, this is part of the wrestling match that's going on. The U.S. wants to hold on to its hegemon, which allows it to dominate world GDP by use of the dollar and its military and things like that. But again, I've been pointing out for years the cracks in the facade, right? That the things that we were doing before, we're doing things a lot different now, and we're putting at risk the model that worked in the past. But this was kind of, I thought there was a bigger decline, but I was mistaken. So this was interesting. The other thing that's, I think, helpful for the U.S. is, at least since 2010, is our dominance in energy and the shale boom. People really underestimate how much of an effect that had in the investment that went in, the uh, the, the reduction in the amount of imports, the natural gas boom, and the chemicals and fertilizer and just low natural gas prices. How much that helped the United States. So here's a chart that we've talked about before. We're just going to keep showing these. This is basically around when the you know, we've seen this decline. This is basically foreign bank reserves. The US dollar's been in decline since for a while now. This only goes back to 2015. It was at 66%. Now we're down to 57. You've seen gold has been increasing. The euro has been steady. But this is what, it's really accelerated since the invasion of Ukraine by Russia and the sanctions regime and the message sent by geopolitically. And so, confiscation, freezing of assets of, another major economy, superpower, if you will, nuclear armed superpower, Russia. And so the message was sent to a lot of the other countries around the world, that, hey, wait a minute, maybe we don't want to have all of our assets in the US dollar. And so we're seeing that. And the euro doesn't really seem to be picking up much market share uh, for obvious reasons. So gold is where people are turning. And so this is not, this is just a slow loss of market share over time. It's not, doesn't mean the end of the dollar, but it's sending a message. This is another reason why I'm bullish on gold. So here's the gold and S&P ratio. We've broken out now. This is only goes back to 2020, this particular chart. But you see the breakout. This means that gold is outperforming the S&P. When this tends to happen, it tends to, we tend to get big moves higher. So again, gold is outperforming the S&P as the S&P now goes through probably a period of rotation out of tech and the AI stocks into value, energy, resources, commodities, gold. This will probably improve, but this is a pretty here's tried to bust through a couple times over the last few years, and now we finally penetrated it. So uh, it is behooves you to watch this because I think we're at the beginning stages of a rotation that could be quite profitable. So here's Google Trends. I use this a lot. This was somebody posted this on Twitter, but it's $3,000 gold basically is the title of the slide, and no one cares. And of course, I love this. I thought that when gold now has been trading above 3,000, it penetrated it. It's at above 3,000. It's holding. This is tremendous, and yet the searches on Google Trends for gold stocks, no one cares. Although gold stocks are now starting to rally. There's stealth rallies going on in the gold stocks. I think we're going to have a tremendous bull market in gold stocks. That doesn't mean you just rush out and just buy any old moose pasture, but I've been accumulating them. I think that there's it's time to start moving down the food chain. I've got some in the portfolio. I'm going to be adding another one probably in April in the newsletter. It's more of a emerging prospect generator of royalty play. It's really very interesting. And so this is where things are heading, in my view. No one cares, and yet the gold price continues to move higher. And smart money now has been and continues to move into the gold stocks. And eventually, I think if as long as it's the energy prices are really helping earnings at these gold companies right now because we haven't, a large portion of the costs of mining are the diesel costs for the mining equipment and the trucking to the plant. And we continue to see oil prices kind of just staying in this lower range that they've been in, which is very helpful. And we're seeing, tremendous cash flows, record cash flows and earnings coming out of these some of these gold mining companies. So these first quarter earnings fourth quarter 2024 and annualized 2024 were awesome. First quarter 2025 shaping up the same way. So um, eventually, I think that as the money continues to leak out of Mag 7, if it continues, a certain portion of it's going to go into these gold stocks, and we're going to ignite a rally. And again, the market cap of all the gold stocks is not that big. So you don't need a lot of cash, a lot of push to come in to get a real big rally. And once the rally gets going, a flywheel effect, you'll start getting the media attention. This will change and it'll become the shiny object. So this will be the time where I'll be going into some political commentary. I'll take a short break for those that wish to disconnect uh, because they can't handle my views or don't like my views. You don't have to agree with me. Most people don't agree with me. I admit that. My views are very out there. I'm way on the moving the Overton window. So this is the president of Argentina. Some people like him, some people don't like him. I've watched a lot of his discussions. I will say that he's very opinionated. I do like this quote because I agree with him. Does this apply to the U.S.? Yes. Here's the quote. The underlying values of leftism are envy, hate, resentment, unequal treatment under the law, and violence. Javier Milei. And so what are we seeing in the U.S.? Okay. We had an election. The people in the country voted for change. They elected Donald Trump. Donald Trump was very clear on what his policies were going to be. He won the election. You don't have to like that he won the election, but he won the election. He is now instituting the policies. There's many people on the left that don't like the policies. That's you don't have to agree with the policies, but we have a way of governing here. I didn't like the policies of the Biden administration or the Obama administration. I didn't go around setting things on fire, perpetrating violence on people, going to New York City or San Francisco to high-end restaurants and screaming at leftists. That's not how we do it. We argue, we make our points. We have the election. The election happens. The policies are articulated. That's what people voted for. But leftism doesn't allow for that. Okay. For various reasons. I don't want to get into this in this video, but there's a spirituality involved in humanity, and this is part of the problem. But I'm not going to get into that. That's a sidebar conversation. The bottom line is that um, leftists are totalitarians. They've demonstrated that throughout history. If they win an election, then they're happy to say that they won the election and move on and institute their policies. If they don't win, then it's all about resistance and reactionary events. You know, and so you don't like the fact that the Doge guys are finding all this corruption. You don't have to like it. I think something's wrong with you. Why anybody would be against efficiency or rooting out corruption, but that's the way it is. So these people are they're so full of hatred towards the president, okay, that anything that the guy does, they're going to be against. If they found a cure for cancer in this administration, they would still be against him. I remember during the last election when Biden uh, won the election. Before the election, if you remember, they had Operation Warp Speed for the mRNA vaccines, so-called vaccines. And you can find video after video of major Democrats like Kamala Harris and these other folks saying there's under no circumstances will I take any vaccine that Donald Trump uh, uh, was part of developing or whatever, Operation Warp Speed. I'm not going to put that in my body. They won the election and then they went totalitarian and were forcing people to take it. This is the left. They're unhinged. Okay. There's something wrong with them. Okay. They are full of envy, hate, and resentment. And we saw the unequal treatment under the law when they controlled the last administration, using the instruments of the government, the organs of the government, state apparatus against their enemies. We saw it. Now there's going to be people that come on here. They're blinded. They don't. I don't agree with you. Blah blah blah. Hey, that's the way I see it. And so what needs to happen is that we have laws. It's like Tom Homan said, who's heading all these deportations. He's told people in Congress this during testimony. If you don't, I'm enforcing the current laws. If you don't like the laws, then change the laws. There was a another sob story this week about a couple that was living in Newport Beach or Laguna Beach, which is a high-end area in California. They had been here 35 years illegally. They were from Colombia. They had three daughters that were born here. They were working here. What have you? They would go and report in already to the Homeland Security or whoever controls Immigration Service. They knew they were illegal. They knew they had tried to get naturalized. They weren't going to let them for whatever reason. We don't know the whole story, but bottom line is they didn't qualify. So they went in and then they were arrested and they've been deported to Colombia under a law that was passed in 1996 and signed into law by Bill Clinton. Again, if you don't like the laws, change the laws. Problem is that the majority of people in this country don't want illegal immigration anymore. And so you can go cherry pick the sob stories here and there, like the media does, like the left does, because they are they are liars like their father, the devil. That's what they do. Like that couple is the how everybody that's being deported. The laws are what they are. If you don't like them, change it. We had an election. The people don't want the laws changed. The laws are being enforced. And so what the left does, the radical left, is go out seething with anger, seething with resentment, unhinged, setting Teslas on fire. Okay? This is their act of defiance because they're revolutionary. Okay? That's those are crimes. Those are state crimes. And it sounds like the federal government is spinning up now to apply terrorism charges. Some of these people, as the president indicated the other day in a press conference, could be looking at 20 years in prison, and that's what should happen. We cannot have a situation where we have one. This is why this is another reason, which I'm not going to get into today, why the United States is not going to endure as a political entity. The people are too divided. Okay, it's not fixable. Okay, but that's another story. But in the meantime, this is where we're at. And so if you don't like the laws, there's a midterm election coming up. Get out there, get congressmen elected, get senators elected, and change the laws. Oh, but the president can veto it. Then your next opportunity is in 2028. This is how this system works. I like the system when I win. I don't like the system when I lose. That's the left. Okay. And that's why you have all these leftist judges, district judges with very little power, far I know that people on the left don't agree. Well, the Trump administration is, not the three branches of government. These are district court judges. They have, there's an argument that they don't have the power that they think they have, trying to hinder. This is what the left does. Okay. Slow it down, hinder it, gum up the works until we can get back in power and reapply. The people don't want that. And it's not going to sell to the people. Okay. And you can't get away with hiding anymore. The internet is what it is. This is all being exposed. And so we'll see what happens. But you know, if I wouldn't suggest you go out and harass people with a mask on in traffic, get out of your car and harass a Tesla driver. You do that in certain states like Texas, you might get shot. Or go around and set Tesla dealerships on fire, especially when this era that we live in with cameras everywhere, or go around. There's probably been dozens I've seen of videos of morons going around and scratching with keys Teslas. You're going to be found, you're going to be prosecuted. Is it worth it? Is it worth committing a felony and ruining your whole life because you don't like the current president? That's that's unhinged behavior. That's a mental disorder. Okay? Are you that wound up in a 4-year presidential cycle? It affects your life that badly that you're willing to spend time in prison and be a convicted felon? Why? Doesn't that seem unhinged? It does to me. So I'm just going to make a few comments here. We had evidently a protest in the UK. So I have here it's the same, right? Young college educated white women, liberal white women who are the scourge, who are bringing down Western civilization, white English women calling for the banning of white men. And I put it here, the irony is lost on them. As Islamization marches forward, do you think that, you know, first of all, white men aren't going to get banned, what have you? I know I'm not going to get into that. This shows you, again, more unhinged, more lack of clarity, no understanding of irony. Rape gangs over there in the UK, Islamization, unfettered immigration, rapes are up, assaults on women and children. And the problem is, of course, white men. The irony is lost on these people. That's why they're lost. And so it's going to take a extreme event, whether economically or social politically in these countries, for a resurgence of the white man who's going to have to set things right. And it may not happen. And that's why I say I'm not looking forward to. I'm just telling you what's going to happen. There's going to be reactions. I think the idea was we have these decline because of the feminist movement and empowering women, and women are just like men. And so women entered the workforce, hurrah, hurrah, hurrah. And then birth rates went down. And then in the Western democracies, we started seeing that birth rates were down and we're not replacing our population. We have these huge pension and social obligations. What are we going to do? Let's import people, okay? And we'll fix our demographic problem, which is traced back to other issues, which we aren't going to discuss, evidently, like this nonsense. And that's not working. So now you're in a situation where you've brought in a population that's incompatible with the native population, that isn't going to solve your pension and debt problems, and demography problems, and is now a problem and a net drain on resources. That's your elite. That's how they solve it. And so the new solution in Europe for the economic problems is not to get rid of regulation, not to get rid of the EU, not to have competitive economies, not to allow, like we do in the U.S., to have a loose confederation or a confederation of states, but they compete against each other with taxes and regulatory environments. No, we're going to have a centralized bureaucracy in Brussels run by a bunch of people that don't know anything and have never done anything in their life, creating more regulations, and then have perpetual war as the way to keep the economy moving forward. That seems to be the plan. Good luck with that. I think these people should understand that before they die, they will be wearing the hijab, whether they like it or not. And I think a lot of them will do it voluntarily because when they see the alpha male Islamic, they'll be drawn to that. Okay, they'll be drawn to that. And I've already seen vignettes and anecdotes of English women and European women that have converted to Islam and said that's exactly why. They were attracted to that manliness. They're men. Whether they're beaten or not, or being told to wear the burqa or the hijab, I guess they felt that that was, part of the uh, what attracted them. I don't know. So this is a problem, and this is where a lot of this nonsense comes from. These women are unmarried. They don't want to have children. They're just perpetually outraged. They've been indoctrinated now. We've had 2 generations of this nonsense, and it's undermining and rotting out Western civilization. It's not the only reason, but it's a big part of it. That's my view. And I don't hate women, but this isn't really working, and something's going to give. I heard one commentator say, and I agree with this assumption: you can either have um, feminism or you can have civilization. You can't have both. And I think that's going to be proved to be prescient and prophetic. Okay, guys, that's it for this week. We'll talk to you next week. A lot of things are happening. The rotation, I think, that we were expecting is starting to happen. We're taking advantage of it in the Actionable Intelligence Alert newsletter. We're seeing the rotation. We're seeing the money come into our themes now and to our sectors, and I expect it will continue. That's my view. All right, that's it for this week. We'll talk to you next week. Thank you.